AM Best has just published its market segment outlook for the London market insurance segment. Joining me from the London office is one of its authors, Kanika Thukral, Associate Director of Analytics. And Kanika, AM Best has maintained its stable outlook on the London market insurance segment. Can you summarize some of the factors that supported the outlook?
Of course, the outlook is supported by three main factors, I would say. Firstly, as you're all aware, we are in the midst of a softening market, and AM Best's expectation is that pricing conditions for most business lines are expected to remain adequate at least over 2026. So this should generate positive underwriting results for London market participants over the year. This is, of course, subject to catastrophe claims remaining within the budgeted allowance for the year. Secondly, with a prolonged conflict in the Middle East, central banks are expected to hold or even raise interest rates to combat inflationary pressures. If interest rates remain higher for longer, these are expected to translate into healthy investment returns for London market companies, as we've seen in the recent few years. Lastly, the recent M&A activity suggests that London market is quite attractive. We have seen large insurance groups like Sompo, Star and Radian acquiring London market companies to strengthen their specialty offering and their profile in the market, with often the targeted companies having a good level of Lloyd's market presence. Lloyd's itself has seen an influx of new entrants, hence suggesting the market is quite attractive to enter. For some of these reasons, we had considered whilst maintaining the stable outlook on London market insurance segment.
The report notes the expanded use of alternative sources of capital. How does this capital support the market, and are there any downsides London market insurers need to manage?
Of course, over recent years, we have seen London market companies have issued catastrophe bonds, and in some instances, they have established property and casualty sidecars. We've also seen that Lloyd's, through its London Bridge vehicles, is enabling writing reinsurance using third-party capital in the market. So these sources of capital are expected to support returns for the issuers, for the market participants, particularly in the softening market. So these sources are likely to boost returns. Secondly, by offloading the tail risks of large events, these are also expected to smoothen the performance and remove volatility for London market companies. Now, to answer the second part of your question, the downside is that third-party capital entry in the market coincides with new market participants, as I just mentioned, and also healthy capital buffers which have been generated due to stellar earnings over the last 3 years. So increased capacity heightens the risk of further market softening and putting pressure on the performance. So maintaining underwriting discipline and to manage the cycle, that would be a key aspect that London market companies are expected to focus on over the near to medium term.
The London market has significant exposure to natural and man-made catastrophes and has historically paid a material portion of insured losses arising out of major events. What does AM Best believe would be the effect of a prolonged crisis in the Middle East on the London market?
In the Middle East, standard insurance policies often contain war risk exclusions. So it's the specialty lines that can see rising claims in case of a prolonged conflict. For most Middle East insurers, cede out specialty business to London market participants such as Lloyd's. So in case of a prolonged conflict, it is likely that London market participants would see rising claims. As such, a prolonged crisis in the Middle East is likely to generate losses for the London market, particularly if insured infrastructure becomes targeted. It's the specialty lines like marine, aviation, energy, and commercial and complex risks are the ones which are expected to see rising claims if the conflict continues longer.
That was Kanika Thukral, Associate Director of Analytics at AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.